Hello everyone, Jesse Webb, Traders Pro. Market conditions are extending to the upside just a little bit. Looks like we're going to gap higher on some good NVIDIA news. That move yesterday did push us back up into mildly bearish in this bull market. We've just got a little bounce happening right here that also took momentum back up into this bearish trend zone. We talked about that the last few days when it was extreme, and now it's moved back up into this sell zone. Typically when it gets back up into this zone, just like it does when it's up in this zone, it'll move back and forth inside of this zone. It'll go up to extreme, it'll pull back to a buy zone, it'll continue higher. So if the stock's moving higher, it'll retrace, pull back into the buy zone, move higher, get extreme, retrace, pull back to the buy zone. That's on the opposite side. If this is going to continue back down to the downside, we're in that location now. Maybe it'll bump up just a little bit more. If we continue to move aggressively to the bullish side, then conditions are going to start to change. But we're running into some resistance. We definitely were oversold and due for a bounce. Really, any of the momentum indicators and reversal indicators have been oversold. So sentiment here. So a good strong bounce off of this move, and then a retest or at least another pullback is certainly warranted right here. If we look at SPY, and I'm going to come back to that buy-sell ratio, but SPY, again, we're inside of this range right here. We're going to counter trend back up and retest this area here, maybe just a little, even a little bit higher than that today. If we gap up, looks like SPY is right around 444, up a little bit, not a lot, but could gap higher, and that could also run into the resistance and create a reversal back down to this 429 zone. That 429 zone creates a bearish support location. One of the other things I wanted to go through today I thought was interesting was looking at the transportation on the Dow Jones transportation stocks. Notice that 13 of those are in are in downtrends. But if we look at some of these stocks here, the top being United Airline, Delta, they're all in bearish trends and all have relatively weak ranks, which may be an interesting indicator of what's to come. But if we actually look at this 6-month chart and a support area, we're starting to see that deep retracement. A lot of them are settling in on this 50% retracement zone and starting to bounce right here. And I also like to see this 3-part counter trend where you have 1, 2, 3 like this, and then some support. So it's got some work to do, but if we were to see transports rally, goodness graciousness, and move back up above this zone right here, then we could see some momentum building back in transports. If not, if this is counter trend and we're seeing moves like today, you're seeing all of these transports, Delta Airlines, also a day or 2 or 3 run back up, hit resistance, and then reverse back down. FedEx also, FedEx has been one of the stronger ones in that trend, but we are seeing a lot of these retrace and pull back. So we could be oversold and sold off enough on some of these sectors. This is still an uptrend as of now, and if we just continue to find the support levels here, we may see a bounce. If not, and we continue to slide lower, and those transports leading that path, that's interesting perspective of what may be coming for the economy. It's already thoughts of slowdown and recession have been discussed, but transports leading that charge to the downside is of note. If we take a look also, let's jump into the muscle ETFs and see what's kind of leading in the last day or two, if there's anything interesting or at least that stands out to us. As I've mentioned before, sometimes there are so many different kinds of ETFs now that you get all kinds of different scenarios and strategies. Wisdom Tree Japan Hedged Small Cap Fund, so something like that. Looking for international exposure. Innovator S&P 500 Power Buffer. Have no idea what that is. You can spend some time going here, click on the More button, go out to Google, go out to any of these others and take a look and see if that's something that's of interest as well. It's just going to be pulling all those stocks. It's really nothing interesting, in my opinion, right here. As of some of these moves, the ETF, we've been talking about banks. Uranium miners, URNM, which has also had a nice move. That's moving in the bullish direction. Uranium miners, we're seeing US, this is the 3x negative. So as banks are falling, this ETF is going to rise. For every 1% they drop, that will go up by 3%. And we're seeing ultra short consumer goods and real estate. So this ultra short real estate's been getting pummeled here with this trend. So this is going higher as real estate is dropping. So a little bit of a reprieve here on that yesterday, a little bit of a pullback. Part of this bullish rally that we're getting here in stocks, obviously this is an inverse ETF. So as real estate, so it's going to look the opposite. An up day in real estate is going to be a down day. A down day is going to be an up day in bizarro inverse land. Okay, the real estate, consumer goods, utilities, and bullish uranium. That bullish uranium is an interesting play. We're seeing some of those, and this is what we want to see. Yes, it's extreme, but we want to see it in this upper zone. And ideally, we do want to see it connecting to a new high within the time frame. If we're looking at that 6-month time frame, and then allowing for it to have this much of volatility inside that upper zone as it continues to march higher. Maybe it pulls back a little bit, then it continues higher, pulls back. This connects to this new high, then it connects to the next high. It's going to pull this range with it. So when we're looking at trend and momentum, we want to just be focusing on this area of the chart. Really, we could just block out visually this entire piece. Yes, it matters, but this is really the only part of the current analysis on a bullish trend that we really want to focus on. Is it moving higher? Is it making a new high or relatively close? Or is it, if it hasn't made a new high in this time frame, is it still inside of this upper box? Okay, so let's go through some muscle stocks and look at some of those trends here. Currently, some new buys. MOD, a good example of what we want to see. This is connected to this most recent high. This high hasn't made a new high, but it's inside of this upper zone. You can see it actually bounces right off of that area where it has been before and is now continuing that uptrend, and also has a really nice bullish profile as well as a really solid fundamental profile on MOD, auto truck, auto parts stock. Let's jump over to the next couple and see. Let me just refresh this page and pull that into this scan, which I prefer to do on my new buys. MOD, PTG, nice bouncing off the bottom, but not. We want it in the upper range. So these are, if we're looking for a reversal type pattern, this will still pull those in, but ideally we would like to see it trending in that up direction or already there. FSLY, nice solid move here right off of that support zone. Recent upper high here. Good bullish fundamental profile, and it's inside that upper zone. 9%, that would allow, when you're using your risk management, money management, there's various approaches, but trailing a stop or using a stop loss to begin your initial trade and your initial capital is always a good practice, because that's fresh capital on the line. That's new money that doesn't have any gains yet, and so you don't want to risk that capital to a certain degree, whether that's 10%, whether that's 15%, whether that's 20 to 25%, or even just using one of these ranges. That's going to be a pretty decent amount of variability. In fact, if we were to add this into a portfolio, and then let's say I wanted to set my stop loss at 17.75, and I add it into this, let's just go this top portfolio, and I want to buy, let's just say 100 shares, and I set my stop price at 17.75. That's going to tell me the amount of risk on that trade. So it's essentially saying my stop is going to be a 15% stop if I need to set my stop loss at this low right here. Then as it's continuing to move higher, once it snaps up to the new high, it's going to drag this number up with it. So you can continue to adjust that 15%, which is essentially called a trailing stop. And there are various methodologies to adjust your trailing stop, whether it's just a flat fixed percentage, or if it's a mechanical method of saying I'm going to low, as the stock is moving higher, we're going to adjust it, or in this case, a trailing number that is based on a process or a support zone that's moving higher. That still has to be a manual process, but you could also say, all right, we're sitting right at 15-16%. I'm going to maintain that as a trailing stop level, going higher on that stock, and That would fit nicely inside that range. CLS, another nice looking stock, computer electronic stock, really solid fundamentals. Again, when I'm saying that, I'm just glancing at the green, all of the green right here. You've got ROE, EPS, last quarter EPS, sales growth, not tremendous numbers, but moving in the right direction. Obviously, the market is liking this price pattern, and we're focused on this overall uptrend. And ideally, we're entering into that buy zone as it's starting to continue higher. BLBD, same story. I would like to see that in that upper range. WVE, medical stock, biotech, or biomedical stock, upper range, at least entering into that upper range after a pretty deep retracement. So we'll see what the market does for us today. That'll do it for today's update. Everyone have a fantastic day.